Step one, wake up early, gonna rise with the sun. Step two, get some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Oh, good morning. Welcome to Good Morning Crypto. I'm David. Next to me is BC Port Corp. What's going on, BC? How you doing?
I'm doing all right. It's definitely looking like an easy day at work. So I'm gonna be watching the markets and probably clicking buy at a few levels that I have my eye on. Because I've been moving dry powder over so I can deploy it.
That's what's up. Yeah, yeah. So today we're gonna be going over what was it that you had?
I have a news article about the Bank of Japan,
Oh yeah,
but the big data for today is going to be inflation rates. We get inflation rate month over month and year over year, and then core inflation as well. So that will be the big market movers for today. And then going into tomorrow, where we get CPI. So,
big data.
yeah.
Yeah. So let's go. I was gonna say let's tell the people good morning, but I mean nobody's here yet, so.
They'll trickle in slowly. It
Yeah,
looks like there's
there's a
a few
couple.
people watching,
Yeah.
but nobody in the chat's just right off the bat
What
this morning.
people
So
people aren't awake at 6 o'clock in the morning?
I mean, I don't even know people that work at the same job at me that are awake right now. Like there's like a one boss that wakes up at like 5:45, and that's because he lives like 45 minutes away. But like everyone else rolls out of bed at like 6:30 and they're there at 7. So they're like, how do you wake up so early? And it's like, so that I don't just be a fat lazy person and sit in a machine all day. I want to get a workout in.
You wake up and work out?
Yeah, every morning.
Nice.
So like I do a little workout from home. We've got like a bench press and some other workout stuff. But I work out and I have a few charts pulled up, and that's how I can sometimes make an early morning trade. We're like, well, if you were awake at 4 a.m. for this move, and I was like, ha, that was me. I made that trade, David.
Oh, look at the butt on that. Yeah, he must work out. Dumb and
It's more
Dumber.
so to just, oh yeah. For me, it's more so to just stay lean as opposed to like get big or anything. I just don't want to be a fatty in the machines like the rest of some of the people at my job.
Well,
But
then
it's
you
like
need to
I
get
get it.
out and start doing some shoveling.
Uh that's actually what I did earlier this week. They made me do some physical work. And I'm like the only one not complaining about it. I'm like, we don't get to use our bodies very often. So I'm gonna go home extra tired today. Just sounds like a deal.
And this sounds like I can go home and just pass
Oh
the F
yeah.
out.
Well, that was the night where you like messaged me some news headlines, and I like hit you back at like 3 o'clock in the morning, and I was like, yeah, I was asleep
I
at
was
like
passed out.
7. I was asleep at 7. They had me doing manual labor.
Dude goes to sleep before my kids go to sleep. I swear to God.
Hey, I mean, I'll totally trade sleep schedules with your kids.
I don't know, man. I don't know. 9:30 to 5:30 is the earliest one.
I mean, that sounds doable. I'm sure you'd be extra happy with them going to bed at like 7:30.
But can't do that. So yeah, so let's go ahead and get into that inflation data, or we'll go over. Go ahead and do the overview, and then we'll get into the article and talk about some inflation. Blackie Chan break this stuff down for us layman's, and but yeah, so let's go ahead and get the people prepped for success.
Sounds good.
I'll go
I've got
ahead. What's up?
I've got the stock heat map ready to go. So,
All right, there we go. Bang.
all right. So, for the stock side of things, it's looking pretty green. We've got Apple up 1.67. Nvidia, after its little rip the other day, is sitting down 0.18. Not too big of a loss. We've got Berkshire Hathaway up 0.46%. They're still sitting on lots of dry powder. We got Amazon up 1.34. We got P&G up 0.66. We got ExxonMobil up 0.4 after dumping 3% the other day. Got P&G sitting up 0.97. We've got Tesla that is sitting down 1.41. United Health Services is up 1.66. We got Visa up 0.72. Eli Lilly is up 0.66. And for the big three and technology, we've got Microsoft up 0.66. Google is sitting down heavy at 1.53. And Meta is trailing a little bit at 0.4% down. So pretty green. We'll see how the inflation data will impact all that coming into today, though. We do have Bitcoin sitting up 0.8. We've got Ethereum up 1.17. We've got BNB sitting down 0.32. Solana is sitting up 0.18%. We've got XRP up 0.55. Dogecoin is down 1.02. Tron Coin is down 0.37. Toncoin finally doing something a little different from Tron, is sitting up 0.2%. We've got Cardano sitting down 0.47, and Avalanche is looking like the big winner in the top 10, up 1.47%, 1.24%. On the economic calendar side of things, we do have the big data drop for today. So, continuing jobless claims, just the revision, but we do have core inflation month over month, core inflation year over year. We do have CPI, which is looking like it's going to tick up a little bit, which is not a good sign when you have the Fed talking about, well, a big part of why we want to cut rates is because of CPI, which is the one thing that sorry about that. I
Goodness
had a cough.
gracious.
Yeah, I don't know what happened. You do see the Fed here, the ECB, and the European Union, the UK talking the same, and Canada also talking about how their CPI and their job numbers are the biggest factors in them deciding their rate decisions. So I believe that this will be slightly bigger of a mover than the core inflation, because you have that core inflation rate year over year looking like it's going to be staying steady at 3.2%. You do have the month over month, which is been steadily ticking down for month over month, from 0.3 down to 0.2. So something good on the inflation data to look at, but your CPI is starting to tick back up. And this is what we don't want to see. While job numbers are okay and have been improving, that CPI can drag everything down. You do have your just standard inflation rates as well, month over month and year over year, and then the initial jobless claims data, all coming out at the same time, 8:30 Eastern. So an hour before or 30 minutes before market open. Other than that, you just have your bond and some mortgage rate data. That 30-year though bond auction is going to be a slight mover for TradFi. It gives a signal on people's long-term perspective for where they'd like to park their money. That monthly budget statement as well will be a big mover. The prior was negative $380 billion. It is forecasted to be up significantly. So you might see a little move up at the end of the day because that's coming out at 2 o'clock. So markets have a little bit of time to do something with that. I can pull up the fear and greeds real quick. We do have the stock market, fear and greed, staying the same, no change. Off of a little pump yesterday, we're still sitting at 72 and greed. The big one, the biggie, which we said was going to become, or well, at least I said it was going to be coming off of a slight move down. We are now sitting at 39 and fear, which is a big change from yesterday, down 10 points off of a percentage dump. I said it was coming. I said it wouldn't take a big move down to hit fear. I said it wouldn't take a big move down to hit extreme fear. And that's what we wanted to see. If you're looking to click the buy button, like me, because I'm super happy about that. That looks awesome to me. I can't hear you, David.
It's fool's gold.
Uh, well, I mean, it's good enough for me to click a buy button on a few assets. Not that I
Hmm.
don't think we'll go down further, but that's kind of a little signal for me to maybe start DCAing back into some assets. Because if we're gonna hit 1% drops and drop 10 points on the fear and greed, then I'm definitely looking at buying. So
Yeah. Oh, do you have that heat map up?
yes, I can pull that up right now. I've got all of the short-term liquidity sitting above us at our old high from the other day. It is sitting at 62,471, which easy grab. But if you end up looking at like the 1 week chart or the 3 day chart, you do see it's no liquidity on either side.
Mm,
So it's probably going to be more of a data heavy move that sends us in either direction because there's not really any liquidity close to us on either side to really grab it. So like the market maker doesn't really have like a target point to shoot for. You don't really see any super heavy until you move to like a 1 month chart. And that heavy is going to be below us, sitting at 59 to 58.7, or above us, sitting at 66 and going all the way up to 68. So,
interesting.
yeah. Uh, I mean, it's very
Interesting.
easy to sweep that low and then move on back up. That other heavy one below us, kind of both talked about it, is that 56 point.
I've got a new idea. A new. I've got. I've. I've branched on my forecast, so
Okay.
I've got
Well,
a new outlook, a little bit of a new outlook, but we can get into that later. So, so what do we have? Oh, good morning, Alexandra G. Um, what do we have? And oh yeah, hola French toaster, ALJR, and good morning, Darren does things, Mr. DDT. Bit late due to a walk meeting, WEC meeting, catching up on 2X.
oh boy. I wonder what I sound like on 2X.
A little, I don't know.
Yeah, probably.
Probably something like that. So, what do you think about this inflation data? What do you think it's going to do to the markets today? It's going to rock them. Is today
So,
inflation data? What do we got?
yes, today is the inflation data. And like I was saying a little bit earlier, um, I do think that the CPI will be slightly more important than the inflation data. You are seeing the inflation data kind of back down to their targets, where once we get this data for the morning and kind of head into tomorrow's data where we get core PPI, that core PPI is going to be how you're going to use your inflation data. So when you see the producer price index coming in where they are now spending less money to produce their goods while inflation is coming down, you can kind of expect to see that move over to the consumer side of things, where we do get the consumer price indexing today as well. So you will already have all of that data to gauge off of PPI tomorrow. So I don't think that we get too big of a move in either direction unless you're in the TradFi markets. Whereas in if we get positive numbers for the inflation data, like the 2.3 coming down from 2.5, which is a big indicator on we could achieve the soft landing, quote unquote, that they've been shooting for, because 2.5 to 2.3 is a nice healthy drop, but the big problem after that is going to be seeing it come down like you see in the European Union, where they're now scared because inflation's going to be coming down to possibly 1.8%, and they are scared of an overheating of their economy, which is also just as scary to investors as inflation being too high. Because where do I park my money now? If everything is overheating, technically everything would be a good play for the short term, but your safer long term is going to be back in with those safe assets. So you will see like the S&P is kind of just doing its thing and being a good place to park your money, where hey, 8% is better than not knowing what's going on. And that's where they haven't really had a whole lot of security and what they're telling investors. Just, oh, look at the job numbers that we change uh every week. Hey, oh, look at the CPI. Look at your gross domestic income, where that gross domestic income will be impacted heavily by trades on goods. So it is a good thing that lineman strike ended, because if we were going to be basing what we do on rate cuts by trades of goods and our income, then we kind of need to be able to import and export things. I can't hear you. Been
Sorry, I
muting
had to
yourself?
mute myself to sneeze earlier, and I forgot to unmute.
Just sneeze right in the people's ears. Like like it'll be your version of the Rock and giving them the people's elbow.
Can you smell what the Rock is cooking? It stinks.
Yeah.
The Rock can't
I mean,
cook.
I mean, no, he just I mean, have you seen those little videos he does where he's like, okay, well, this is what I'm eating for the day? And you're like, brother, your toilet must smell terrible. You ate a whole 64-ounce steak and then you just had a protein shake before that. Can
You
you
ate a
not be
whole
anyway?
pig. What is
Yeah.
wrong with you? Oh man, that's funny.
I mean,
But
that's what me and my buddies did last Thanksgiving. We just luau roasted a pig, dug a pit,
did
threw
you
a
say
pig
y'all
in
did
there.
a luau roast?
Yeah. It took 2 days to cook, but dang, that thing was juicy.
Dang. Yeah, we do. Man, that's something that I love. Whoa, hold on. What is this? Silly USDT. This thing is up 60% on the day. Got no
Well,
idea what that is, but
so do people's what you're looking at.
no, it's silly.
Oh, well, I think that's why they called it silly.
Yeah. No, we need to go ahead and get into that Bank of Japan stuff so that because before you get out of here. So,
Yep, I can definitely hop into that.
all right, let's go.
So, I know Piper talked about how the Bank of Japan might hike rates in December, and it's been very conflicting either way. They haven't really been signaling what they would do. And here's another article that just signifies that they don't know exactly what they're going to do. The Bank of Japan, not on a preset policy course, Deputy Governor says. The Bank of Japan isn't on a fixed monetary policy route, its deputy governor said on Thursday, emphasizing that the central bank makes its decisions meeting by meeting. We are not on a preset course, Boryozo Himono said during a speech at Bloomberg event. The central bank is carefully assessing economic data when it meets, he said, and what board members focus on shifts as new figures come in. The data landscape is constantly evolving, and Himono said the Bank of Japan isn't looking only at Japanese activity, but at what is happening abroad. In April, I would have said Japanese consumption and wage data are at the top of my list. Today, US employment and consumption and Chinese consumption data may deserve more attention than before, he said. In short, we look at the totality of the data. The Bank of Japan had said before the policy depends on developments in economic activity, price, and financial conditions, and that it will act as needed to achieve its price stability target of 2%. Himono stuck to what he called the party line, saying that the Bank of Japan will consider modifying policy settings as it has more confidence that its outlook is materializing. He also touched on a meeting between the Bank of Japan Governor Kazuo Uedao and Japan's new Prime Minister Shigeru Ishiba last week. Uedao conveyed that the monetary policy is accommodative and will continue to support Japan's economy, and that it is not necessary to carefully monitor financial markets and economies both at home and abroad when that it is necessary to carefully monitor financial markets and economies both at home and abroad when making policy judgments, Himono said, adding the bank has time to do so. The deputy governor also signaled a willingness among the Bank of Japan's board to improve communications, noting comments made after the market meltdown in early August about the central bank needing to improve its communication with market participants. There is no silver bullet to better communication, but there is a strong will among the Bank of Japan members to learn from what happened, Himono said. And this is kind of what I was touching on when I was kind of dissenting against Piper's thoughts that we might see a rate hike from Japan going into December, because you have seen a little shift by the Bank of Japan, where instead of just focusing on their data, they are focused on how their dollar will be impacted against other currencies. They want to see their strength and their dollar against the US dollar, and they don't really care how that happens. If the US cuts rates again, then depending on the size of the rate cut, you won't really have to see them do that. As well as the European Union has already said that it will be cutting another 25 basis points. And when you see them being a higher importer of goods from places like Japan, then they won't really have to hike their rates there either. You do have their next door neighbor, New Zealand, who is predicted to cut 75 basis points, which just strengthens them in their little regional section on Asia, where you do see them using New Zealand to move some of their goods around. They also talked about how China is going to be a big factor in their rate decisions, which is definitely to be expected because they're in a really critical point right now. Are they going to throw more data or throw more liquidity into their economy? If so, Japan doesn't really need to do anything because that's their dollar being strengthened against the Chinese dollar without having to do a single thing. You don't have to lift your finger if they're making their dollar weaker by injecting massive amounts of liquidity into their system and it's flowing into yours. So we'll just kind of have to play it out by how the the next few decisions around the world go, because Europe is cutting. You are seeing some signs that Canada might do another 25 basis point cut. They held off with our rate decision. So all of these things will play into Japan deciding whether it's going to hike again.
Excellent.
Uh,
What do you think will send markets down today, or today and tomorrow? What data would have to show for it to send markets down?
I mean, even positive data for crypto can send the markets down because they want to see that producer side of things before they re-click that buy.
Hmm.
And that's where you have seen that recently when you have several data points that are coming out back to back where they play into each other. CPI plays into PPI, which like is heavily affected by how the inflation is. Or it's like if you are seeing inflation tick down, but your consumer price index is going to tick up, but you know that tomorrow the producer side of things is looking like it's going to be down significantly, which is what happened last time we got these data drops, then you can kind of guesstimate a little bit that we might see for the next inflation data a tick down 0.1%. What happened off of last one, where it looks like we're going to tick down 0.2%. Yes, the consumer side of things is still ticking up slightly, but it has slowed down a lot, which is what you want to see, because all of that producer side of things is slowly going to start flowing into the consumer side of things, where your inflation, instead of being 3% on the consumer, is going to start ticking back below 3%, as well as the rest of the economy hits that 2% and is able to stay there. As long as you can keep it staying there, where you don't see things like the European Union hitting like 1.8%, then you can kind of float your way out of that. And that's why they call it that soft landing, although we all got screwed the whole way down.
Great
So I
explanation.
I think it's gonna push it down. You might see the little move off of the data. Yes, that's the normal, but I think the overall move is to the downside.
I think you are correct. Let's see.
Show
So,
the people your overview
all right.
or the
So,
the new
what?
overview.
Yeah, message me if you gotta go.
Okay.
All right. Let's get into it. All right, so this is what I'm looking at, guys. So, a little bit of a deviation from the forecast. Okay. Um, I'm starting to think that this is more likely, and this is my reasoning as to why. Everybody expects a Pumptober. We haven't gotten it yet, right? We're only 10 days into the month. I think that it's possible that the data that we get today and tomorrow is going to send us to the downside. After that, I think we get a relief rally because I'm always thinking of what would trip traders up the most. And all I see is Pumptober, Pumptober, Pumptober. Psychologically, what can you do to trick traders the most? Well, to me, it is get everybody thinking that there's not going to be a Pumptober. Okay. Then going into maybe not next week, but the following week, we start heading up pretty quickly, and we start getting, we finish October to the upside, whatever it may be. Then we continue higher until the United States election. Let's go ahead and throw up the events. So we've got the election coming up and the next FOMC. I think crypto in particular is going to get an outcome because of the charts. I'm crazy. I'm crazy for thinking this, okay? But I think crypto is going to get an outcome that it doesn't want, and markets will get an outcome they don't want, which is why we're going to be sent to the downside. If you could put two and two together there, you have who I think is probably going to win the election. Doesn't mean it's going to happen, but it just feels that way. But we do have this area of resistance sitting up above us right here at $67,700, $800. It's right where that liquidity is that BC was talking about. Then we start to build up these lows here, and then election comes, and then we nuke. This would trip up the most traders because everybody would start thinking, psychologically, it's like, oh no, we're not going to get Pumptober. Then all of a sudden, they start inducing that dopamine and sending the price higher, getting you thinking, oh, this is Pumptober. We're getting Pumptober. Then we go into the election, and somebody wins that nobody wants to win, and everything tanks. All right. But then off of that tanking, that is when we get the next move to the upside, I believe. This is a measured move of this upwards kind of triangle wedge. And this is if we were to break out of from like here, then we would come down to like 42K, which is another hot spot of liquidity, and would not be surprising at all to me if we did get that. Now, zooming out, we can see that this is just very, very small picture. Okay. Let me go to the weekly chart. We can see, I'm pretty sure. So if we can get that move up, we can see a move up on our oscillator and then a move down like this when the price comes down. And then if we were to bounce, that would give us a bullish divergence here on the weekly chart. and that would help us push that price back to the upside. So this is kind of what I'm starting to lean towards now. My forecast as it is drawn up. Let me go ahead and bring it up. Now let's go down to the 4 hour so I can do that. My forecast right here, I was thinking, yeah, we would get a little bit of a push up, but not much. But I don't think that little not much, I don't think that's going to, get the most traders off guard, catch the most traders off guard anymore. I don't know. This was, I built this out a month in advance, okay? So like over a month ago. With new data, with new stuff that's coming out, this is, and just me starting to really think about, or think even harder about this. I'm trying to think of what would trip traders up the most, since this has kind of taken a little while, taken a little bit longer than I would think it would take, because I have had to stretch this out to the right a little bit. It's telling me, and like BC is saying with the fear and greed, how it's, it doesn't take a lot of a move down to get into fear, right? But price is holding up, so that's kind of keeping people optimistic. So that's why I think we might get a move down, gotta get people a little bit less optimistic, and then we start going pretty ham for a couple of weeks leading into the election, and that gets people bullish, and then US election, and then everybody becomes bearish initially, and then the markets decide to turn up for some reason. We'll see. Let's go ahead and go over here. What do you think about that, BC? I can't hear you. You're muted.
I totally muted myself. I wanted to hit the mute while I was doing some drinking of water in case people can hear me in the backgrounds. So I do have a little point that's sitting right below us that I've had my eye on for a little while now. It's a daily fair value gap starting at 59,000. So I definitely have some interest to the downside as well. So that my final kind of target is that 52 range right now. I've adjusted my little sentiment on where I think we're going. I don't think we hit my snap scenario, but I think we do blast through this to hit the bottom of the range. So just a quick wick on it, and then we kind of move back up, because with that slight move down, talking about, let's see, 10%, which would hit us the rest of the way to the 20% that I was looking at, we would see extreme fear, and I would be fully allocated with the rest of my dry powder. That's kind of what my sentiment has been. So I do have to head on out for the morning though. So my ride finally showed up. I guess he didn't want to get to work super on time because we're doing some grunt work today, which I won't complain about. I can't hear you. I think you muted yourself.
God dang it. All right. Thank you for joining us, BC. You got anything for the people on your way out?
Just that stay safe, because we are seeing heavy data coming out in about an hour. So this will impact the markets and might send things in both directions. So just keep your eye out on that. We do have a lot of the channel that is looking for that downside move. So stay safe. Use that stop loss, as Piper likes to say.
There we go. That's the one. Well, thank you for joining us, BC, and hope you have an amazing day. And yeah, go get that cheddar.
Oh yeah. Have a great day, everyone. See you in the chats.
Later. All right. I have a request that I am working on currently. Give me 1 second, Billy. All right, 1 second, because I can't do it. I can't pull up my Yahoo on my desktop for some reason. So I'm gonna do some screenshots real quick. All right. BC will just have to ignore that. All right, let's see. Copy. Let's go to the daily. Let's bring this down real quick to move this over. Let's do this. Let's do paste. Couldn't paste the image. Being pasted is way too large. No way. Paste. Oh, no. Okay, well, I can just move this over from here. This will be okay, I think. All right, so this week, well, first of all, let's not start with that. Let's start with this. All right, guys. So, in the blockchain bunker fantasy football league with a bunch of us folks, with Redman, Tradefly, Kelly Kellum, the Biomex, Green Day Prophets, French Toaster, Nick Demandi, Crypto Stevo, PPR Farmer, I can't think of who that is, and Crypto Billy. So I am 5-0. All right, I've scored the most points, first to 1,200. How about that? And this week I've got the wonderful Crypto Billy. After last week, after smashing, after destroying French Toaster last week, this week we've got Crypto Billy on the hit list. And yeah, so I've got a 67%, about a 67% chance of going to the upside and wiping out all of Crypto Billy's liquidity, and then yeah, so we'll see how that one goes. I'm projected to win. I haven't messed with my lineup at all. Yesterday I told him, I said I would I'll go ahead and put in all my bench players to give you a chance. So yeah, let me know what you guys think about my theory on the Bitcoin, and yeah, let me go ahead and move. Let me go over here. We go. Let me know what you guys think about the Bitcoin chart. Does that make sense to you? Did it make sense to you? What do you think? What do you think? What is going on, Buck? T.I. Joe, Trade Intuition. I'm seeing a bear did forming on my fantasy football team, says French Toaster. Normally not up this early, but when I do all-nighters, I make sure to watch the morning alpha. So much knowledge here. You've been up all night, Joe? Go to sleep, bro. Have a nice day, everyone. Also, it says all set. I'm in a BTC short. It's getting close to my stop loss. Very tight stop loss. Yeah, I'm not going short yet. I think I might wait. Think you were on the money, bro. Yeah. Thank you. Yeah, I'm thinking that's what we're gonna get, man. But yeah, I do want to say one thing before we head out of here. If you can, try to find some type of what would you call it? Some type of donation, some type of something to help victims of Hurricane Milton and Helene as well, because that's still going on. So I think there's a little bit more things important going on right now than any of this stuff. So just want to give my my thoughts and vibes, and And if you pray for the people of Florida and everybody impacted, and everybody, you know, in the South that has been impacted by these hurricanes. Yeah, it's kind of rough. It's kind of devastating seeing some of the stuff that we've seen so from these storms. So just keep everybody in your thoughts, and yeah, let's just be safe today. Trade safe, but try to send some money over to the people, good people that need it most, if you can. So, but yeah, that's gonna be it for me. I hope you all have an amazing, beautiful, wonderful, radical day. Ride the waves. They're choppy. They're high. Just be safe. But yeah, so thank you all for joining. Don't forget, in the description, we have Chart Prime, 45% off your first month. We got Blowfin and Blowfin link, and then we've got Legendary Aviation Coffee. So get you some of that too. But yeah, outside of that, don't forget to watch the morning market report at 9:30 a.m. Eastern Standard Time right here on Piper Academy, and we have the final show of the week for the Crypto Nightcap tonight at 8:30 p.m. right here also on Piper Academy. Thank you all for joining me. Have a wonderful and blessed day, and wake up, because today is going to be a great day. Peace out.